Hello and welcome to the stock specific class here for Thursday, November the 11th. Happy Veterans Day to everyone. Let's take a look at the direction alerts. Well, to begin with, the markets are kind of mixed today. We've got the Dow down, but the other indexes are up for the day. We'll take a look at those here in a second. We've had that little bit of a pullback. On Tuesday, I said we were kind of in that no man's land, and I think we're getting a little bit closer here to where to around the pullback I was kind of expecting, where I think the market could start to move back up. Although you never know with pullbacks, it can, sometimes when they can become a little bit deeper if some news comes out that was unexpected that the market reacts to. But there really hasn't been any fear in the pullback and the recent pullback, I would assume that people are already looking to buy the dip, and I'm seeing it in some areas already. I did make some big moves in the portfolio yesterday. I think it was yesterday, where I got out of several positions. I might look to add some, get back in. A lot of it was due to some of the oil stocks kind of tanking a little bit. Some of those I could get back into again, but decided to get to the sidelines there. And I've already told you I was wanting to get a little bit more to cash anyway in the portfolio through this pullback. But there are some interesting stocks that I may add. I may add a couple today. I don't want to get all back in again because that wouldn't really make a lot of sense if I want to be a little bit lightened up and then I jump all the way back in again. But there are a few that we may end up considering as we go through looking at some of these stocks. As far as the direction alerts, one thing to note here is that momentum has slipped a little bit. You can see it right here on this chart. Again, you got sentiment that's still been high. Momentum had been high, but it dropped pretty dramatically over the last couple of days. Breadth is still picking up. It's still trending up, which is good because that's what had been lagging. There have been fewer stocks that have been participating in the rally. But I just wanted to point that out as something interesting there. You can see momentum now has slipped to the left side of the buy area there. Breadth is kind of steadily moving higher. And then you've got sentiment that's still been in this high and near this extreme range for quite a while. But what this tells me is that, like I've been talking about, the market is not in a condition where it's looking like it's going to go into a big correction right here. There's still room to the upside. We're starting to see some flows out of bonds recently in the last few days. So there seems to be some inflows into the market from that taking place. So we'll see if that drives some of the moves higher. Sentiment over here is pull back a little bit. That's good. We're not in extreme level there. As far as the individual stocks, we can look at the market charts here. So you can see we had the recent drop in the S&P 500. Attempted to open higher today, but it's slipping a little bit. That is a little bit of a weak price action here. That we opened a little bit higher, it gapped up a little bit. That's why the S&P is showing that it's up. It's up from where we closed. Here we closed yesterday. It's up from where we closed, but it's lower than where we opened. So that's always a weaker price action. We'll see how that looks into the close. I still think there's potential that it could come down a little bit further. You're looking at this breakout area. There's still a chance we get down into that area there. Doesn't have to necessarily, but that is definitely a potential target area if things do sell off a little bit more. But that's another reason why I don't want to get overly aggressive with getting into things here. There's still that potential. If we had done the opposite, if we had gapped down today and then we were trading up from where we opened, I'd be probably a little more aggressive with buying into that, because that's a bullish reversal price action, and you'd be closer to that breakout area to where there would be a much more limited downside if it did fail, if that bullish reversal did fail. But there's still a lot of question marks with the way that's behaving there. Now, hold on here. On the Dow has just gone lower. I mean, it barely attempted to open higher, but it's gone lower. You know, here it's a little bit closer to its breakout area. That's a terrible line. Let's try one line here. So again, there's still a little bit of downside there. Again, what I'd be looking for tomorrow would be, do you get a gap down and then that bullish reversal? It'd be great if the Dow gap down lower and then ended up trading higher than where it opened, especially going into the weekend, if it could do something like that. But again, we'll see. Q's same kind of chart as the S&P. Again, it's a little bit closer to its breakout area. So again, so I'm seeing this on all the charts. There is some downside, but not huge, not to where, you know, I feel like, you know, it'd worry me to get in. Because if there's some bullish patterns right here, what you have to understand is if stocks are up today and they're showing kind of a bullish pattern, then and I want to get into the trade, even if it does drop a little bit lower, you would expect that those stocks would hold up. They may be down a little bit that next day, but they probably wouldn't be down very much. You'd be able to weather that a little bit. And then if it took off, really started to take off, you had a reasonably good entry into that. You'd be able to benefit from that additional upside. If the market starts driving higher and those stocks start driving higher, it can end up being a good entry. Now, it's a little bit more of an aggressive entry in some cases, based on market conditions. I mean, you're assuming that support area is going to hold. If it breaks through that, it could be, you know, it could be worse. But that's why we put in stops. We're never going to know what the stock is going to do or what the market is going to do. And hopefully you're realizing that by now, that what we got to do is just identify the key areas, identify where we're going to take action or where we're going to make decisions, so that when something happens, we're not caught off guard. It's not something like we're saying, oh no, what's going on? What do we do? No, we already decided what we're going to do. We already anticipated that could happen. And I would assume that on these trades, like let's say I'm looking at a stock with an ABC pattern and it's starting to come back up and it's gone back to a buy signal. I'm going to get into the trade. I'm going to put my stop down below here. That's what I'm willing to risk. I'm assuming then that if the market were to blow through that support area, you know, I'd probably be dropping below my stop loss area. Okay, so be it. I should be okay with that risk. I should be fine with what I was deciding to risk in the portfolio. You'll notice that in many cases, the risk I'm taking between my entry and my stop is right around $1,000. I'm keeping that amount pretty even. Now, you also realize that sometimes I don't get stopped out exactly where I want to get stopped out. Sometimes that amount can be a little bit higher. Sometimes I recognize a bearish reversal before I get to the stop, and I stop out a little bit early, and that loss is a little bit less. So again, this trading is never going to work like with exactness. There's going to be these little variations, and there's so many different variables that go into all these decisions. But what we're trying to make sure we're doing, though, is managing the chaos, so to speak, so that we're not caught up in the emotion of the moment. We're not just getting in because we're panicky. We're getting in because, hey, this is a key level. We know we're probably wrong now. We need to get out of this thing. Now, the Russell has a bullish inside day today. Here's its breakout area. So again, it's not that much further down there, but now it's got a bullish inside day. It had a nice little drop right here. It opened a little bit higher, but it's also trading higher than where it opened. And the entire price action with the exception of maybe a little bit of the intraday high. But most of pretty much the whole price action today has been contained within the body of yesterday, and it's in the opposite direction. This day was down, this day was up. In candlesticks, Japanese candlesticks, they call this a harami. Harami, if I'm not mistaken, it means pregnant. So it's the idea that this is the stomach and this is the child, and it's anyway. I don't need to get into the details of Japanese candlesticks here, but that is what's considered a bullish reversal. It's not the strongest bullish reversal. There are tendencies for these inside days to reverse. There's tendencies for every pattern to reverse, but that would be looking pretty bullish for the small caps. Now, remember, these candlestick formations are very short-term in nature. What this is telling me is there's a very high probability that the Russell goes up tomorrow or within the next couple of days, tomorrow or Monday. You can always have a flat day in there somewhere. You could have a flat day tomorrow and then where it's really small, and then the next day it goes up a little bit. But there's a pretty high probability that you go up off of that candlestick. Now, remember, we've got another 2 hours before the market, less than 2 hours before the market closes. That could change. If it moves up dramatically higher, it's not an inside day necessarily, although that's still a pretty bullish pattern. That it gapped up and then it actually closed higher than where it opened the day before. It could also come all the way back down and close lower and look like the other indexes. So I'm just going off of what I see right now, but with all candlesticks, it really matters what it looks like at the close. But be aware that you just had a real sharp drop right here. If we did rally up off of that candlestick, it could be that this is wave A, this is the wave B suckers rally. It did rally up, but maybe it's just that wave B suckers rally, and then you get wave C that maybe brings you back down to that breakout area. So, but do you see what I'm doing here? And hopefully, as you learn these techniques, you start to incorporate this. I'm playing through different scenarios here. I'm saying, what if this happens? What if this happens? Or could it do this in the next few days? But I'm basing it off of the typical patterns that charts make and that trends make. And this goes back to the basics where stocks will tend to retrace so you have this impulsive move, and in the corrective move, you tend to have that A, B, C pattern, that choppy sideways, but it tends to be the initial sell-off, the suckers rally, the flush out move, and then the continuation of the trend. And that, so you have that basic concept down. When trends reverse, they tend to have impulsive up, impulsive down, and then that's the opposite. The attempted buy the dip rally, it fails. Traders try again to buy the dip, it fails, and then has that flush out move lower. You have that impulsive move lower. And so when I see impulsive up, impulsive down, that's something I can keep an eye on. Is this is saying it should move up off of this, but does it move up sluggishly? Do you have a few days where it goes up a little bit, but maybe it's a little bit more sideways? Maybe you have a couple of attempts where it opens lower and tries to go higher, barely goes higher, but keeps opening lower the next day and then tries to go higher where it's sluggish. That could lead to another impulsive move down, or it could be a warning sign that maybe there's still further to drop. So, and again, understanding it's not always going to play out the way you go through the different scenarios, but again, that way it doesn't catch you off guard. You've already kind of played through some of the different possibilities. You say, well, what if it just rebounds and goes back up? You do see some of these quick pullbacks that go right back up again. Well, okay. Then if it moves higher again, then I could wait for it to break out again, buy the breakout. So back here, it dropped real suddenly, it moved up again, and you say, okay, maybe that could be that suckers rally wave B or whatever, and then right here it broke out. As soon as it breaks out, okay, it's no longer that threat to move lower. Buy the breakout. Again, you're not always going to be watching this as soon as it breaks out. Sometimes as soon as it breaks out, it moves so quickly because a lot of people buy breakouts. But you get the point that you're not trying to predict direction. You don't care about the direction. What you're trying to do is recognize the key areas that you need to pay attention to that could signal continuation or reversal, and then how you're going to manage it if you do decide to make a trade. And then you can see here real quickly the bonds. You had this big drop. I mean, we're concerned that bonds are still rising with the market rising. But now with this big drop right here, it tells me money is coming out of bonds. If it's coming out of bonds, where's it likely to go? It's probably likely to go into the market and could start to drive the market higher. Now we haven't gone to a lower low yet. Here'd be the previous higher low. But that's clearly an impulsive move down yesterday, and we'll see if that continues to move down. It could signal a trend reversal. You got impulsive up, impulsive down. Let's see if that's a trend reversal there. Another thing to point, I don't want to go through the whole watch list here, but gold broke out. I don't know if you noticed that. We're watching this on Tuesday. We said we're very close, but that was the key. This is the key resistance area we're looking for. Yesterday it broke out, seems to be continuing that breakout. So we're assuming now that gold is going to start trending to the upside. We already have get rid of the volume bars down here for a second. We already have a higher low right here. Now we appear to have a higher high. We broke out above here to a higher high, so we're acting like an uptrend in gold. Look at a little bit longer term chart here. So we'll see if that continues. I've given up a while back trading commodities just because I seem to be terrible at it. So, but you gold people out there, that would be bullish for your gold supply. All right, let's. So again, overall bottom line. We're still in a little bit of a no man's land, but we see a little downside into that support area right there. Still some upside potential. So what I'm thinking is I don't want to be overly aggressive yet, but let's see if we can find a couple patterns that maybe we could get into, and then we'll wait for, if there's additional confirmation, we can add more next week. Under computer and technology, now I'm moving a little bit further down the list on some of these just because either we already have them in our portfolio or I don't like the patterns. Again, the basic philosophy is you typically want to be around that 98 strength rank, and then have a good chart pattern to go along with it. If you don't see anything in that 98 strength rank, you got to move down. You can move down the list a little bit. I typically don't like to move down below 90, but there's a couple actually exceptions here, and I'll explain those exceptions of the ones I'm looking at right now. I've talked about this before. Sometimes it's just the sector you're in. There's just not a lot of high strength rank stocks in the sector. And so you have to realize that on a relative basis, you're still probably looking at a pretty good stock within that sector. And but again, we have the guideline, and then we have a little bit of flexibility within that guideline. On computer technology, I was looking at this ANY Sphere 3D Corp, 96 strength rank. Signals here. It had been trending up nicely. We are looking a little bit more sideways here, but we are still maintaining that higher low. Now I would call this when you have a move like that where it's a real sharp move, but then it kind of comes right back down again. I usually try to block that out because it could be just an anomaly, an outlier day. Because otherwise I could say, oh, well, this is a lower high right here. this is starting a downtrend, and that may not necessarily be the case. If you were to eliminate that day, it still looks pretty good. That here'd be a move up. Here's a consolidation. Here's a breakout. Here's a pullback that has a higher low so far. It does seem to be kind of building some tension here, where you're still getting higher lows. You could wait for it to break out. Here's a high right here. I'd be looking to see if it can get above that high and get back to a buy signal there. I think there's enough there you can manage a trade. You could put a stop then below here and see if it can break out of that range and take off, or you could wait for it to break out of that range. This is an interesting pattern. I thought we'd throw it in the watch list. I guess I can go ahead and do that here. For those that may be new, you're going to click on this little green plus signal right here. It'll pull up this box. You've got to create a watch list and name it. I've already got one named stock specific class. And then save and go to the watch list. And once you put it in that watch list, you can then click on this little alert button right here, and it'll create an email alert that'll let you know. It'll send you an email when this goes from that hold signal to a buy signal, so you can consider it for a trade if it does that. I don't always buy it if it goes from hold to buy, because I only have so much capital I can use. I will often reevaluate it though and see if it still looks good. As far as setting up a watch list, you click on add a tab. You're going to name your watch list, and so you go to watch list tab and then add a tab. Name whatever name you want to give it. Bob's super cool stock picks of the day or something like that. All right, computer and technology. Let's go. Here's one that I want to just put in a watch list here. It's still in the early stages of maybe reversing. MVIS is the ticker symbol. It's been on this long decline. I've traded this before though, last year. We look at a little bit longer term chart. It had some pretty nice movement back into here. I think when I traded it was off of this looked like a larger ABC pattern, had this really sharp burst up and then came right back down. It slowly drifted all the way down here, but what I'm looking at is that you've got, well, let's zoom in. We can see this in a little bit more detail. We had this drop that went to a lower high right here. Kind of bounced, went to a lower low, but you had kind of a sharp move down, then you had this little sharp move up, and then it's looking like it's moving a little bit more sideways here. Now, again, this could be in the early stages. A lot could happen. This thing could drop right back down again. I'm not considering this for a trade just yet. I just want to get it in a watch list where I can watch it. But it's in maybe that early stages of a bullish head and shoulders pattern, with this being the neckline right here. So if this can hold this area right here and go to a higher high and break out of this little range there, you could be in the very early stages of reversing that trend. Now, this just comes from years of doing this, that I start to kind of see those early stages of a possible trend reversal. Again, they don't always reverse, but if it is, I want to be on it as early as I can. So I do want to be watching this. So I'm going to go ahead and add this to the watch list here. We'll start keeping an eye on it. And I'll go ahead and throw an alert for this to go tell me when it goes from hold to buy. All right, now the oil sector, this one got hit. I got stopped out of a few of the portfolio trades. I'll go review that with you here in just a little bit. one of the ones that, well, first of all, one that I think, one of the ones I got stopped out of was the CDEV right here, Centennial Resource Development, 98 strength rank. It had this sharp drop right here. I had my stop down below here, but so many of those oil stocks were really dropping. I wanted to just get out of them, and I can always get back in, but a lot of them had some pretty big drops. So I went in, got out of this one, but it seems to be trying to rebound today. If it can hold right here and move back to a buy signal, and we can see oil start to move back up again, it still has held this higher low right here so far, or that could be a potential higher low there. You know, I could jump back in this thing again. Overall, I still like this bowl-shaped move that we broke out of. This could be the cup with handle formation, but with the way the market was acting and all that, I want to get to the sidelines on that. By the way, I'm gonna make some stop decisions sometimes, and you might be just looking at that and say, well, how would I know to make that decision? I don't know how to read the charts yet or anything like that. Then stick with your original, wherever you put your stop loss, whatever stop loss plan you were using to begin with, use it, okay? A lot of times, the reason why it's important for stops is that, first of all, you're trying to put your stop loss at a point where you know that you're probably wrong, right? That's the philosophy of the stop loss. The second is to make sure you can take a loss. One of the hardest things for traders to do is to take a loss. You don't want to, because number one, you lose money. Nobody wants to lose money. But number two, you have to admit you're wrong. Nobody wants to admit they're wrong. So it's like two of the worst things of human nature that you can think of, losing money and being wrong. I mean, you don't want either of those, and you're going to get both of those when you stop out. So in order to create that discipline, you have to just set the target and then be disciplined to stop out with that plan. And when you're starting out in trading, what you're trying to do is develop the discipline. You're trying to trust yourself to get out when you know you're wrong, to be able to admit you're wrong and to be able to take that loss and move on to the next trade. After a while, and for many of you, this is going to be after a while, you still have a ways to go. After a while, you're going to trust yourself to take a loss. I don't care about taking a loss. I've done it a million times. I've admitted I'm wrong a million times now. It's not a big deal. I don't, in this case right here, I know I can get back in if it takes off again. I don't feel like if it goes back again, oh, why did I make that decision? I'm the worst person in the world. I should have just stayed in. I don't second guess anything. So there are some stop decisions I might make that are just based on experience, the way it was looking. And in fact, with CDEV, I was starting to trade below all these lows right here. And I think I was still at a profit, or is that breaking? I can't remember exactly on that one. But there was a chance for me to get out without any damage even. And so there was a number of factors I was considering. But my philosophy is always the same with these. I want to stop out if I know I'm probably wrong, or if I'm pretty convinced that the profit has been made. And I've done that a few times where you have this really big move. You're at the far right side of your extreme reversal risk up here, and you want to try to make sure you lock in most of those gains. Now, one thing I may add later on, I've been trying to keep the portfolio pretty simple, but on some of those type of trades, what I might start doing is taking some profits off the table. If I've got 1,000 shares, do I have to get out of all 1,000 on this with this trend being stretched, or should I sell 500 of it and then let the other 500 go? I am probably going to get into that a little bit later on, but it can start to get a little bit complex for particularly newer people that are joining in. So I've got to kind of weigh that a little bit. But the bottom line is, if you don't understand some of the decisions I'm making, or how would I decide to stop out where Jerry stopped out, don't worry about that right now. Focus on, and if you want to, I'll give you the original stop when I get in. Focus on just using that original stop, and focus on the discipline of using that original stop until you can start to learn these other things and start to trust yourself to be able to use more advanced techniques. Now, I guarantee you, even other professional traders, other experienced traders, might even disagree with my approach. They might say, you've got to have a firm plan to stick to that plan, and that's fine. This is just the way I've done it, and the reason why I allow myself to do it is because I've over the years developed a trust with myself that I'm not afraid to take the loss or admit I'm wrong, and so it's worked for me. But so I just want to point that out, because I don't want anyone to just say, well, Jerry's all over the place, and hopefully in the process, as I talk it out loud like this, I can help kind of walk you through my thought process of why I'm doing some of these things. And I'm not saying that you're going to do it as well, but you can incorporate some of it into it, or at least helps you understand the decision-making process there. And it might help you in some way. Maybe it doesn't. Maybe it tells you, well, I've just decided I don't want to do it anyway, like Jerry's doing it. And maybe that's a good decision for you. Maybe that's the benefit you get out of it, is that you gain greater commitment to your own technique. But anyway, CDEV, this is one, again, I could, in fact, let's go ahead and put it back in the watch list. In case it goes back to that buy signal and I consider it again later on. Or did I already have it in there? Oh, maybe I wasn't in this one. I had so many of these old, I thought I was in this one though. I'll have to double check when I get to, or maybe I added that back in yesterday after I got out. I might have added that back. Anyway, we'll look at that when we look at the portfolio. Oil as well, we'll look at, I still am keeping an eye on this REI. Ring Energy here, 97 strength rank. It had a drop again today, but I'm looking at this as maybe this ABC pullback here. It's kind of pulled back to that breakout area now. So we'll see if that holds. It starts to move back up. This is probably still a little ways away before we'd be considering a trade on it, but we'll keep watching it. And then TTI I did get out of as well yesterday. That was one that I was already in. This is a 96 strength rank, Tetra Technologies. And again, it still could be holding this support area. We'll see if it does. We were just giving back all the gains that we had on this move right here. We're starting to give back those gains, and so I went ahead and stopped out yesterday. This is one that we could get back into. So let's go ahead and put this one back in. The reason why I still want to consider this is it still looks like we could be on that right side of the bowl, as long as we're still reaching higher lows. You have a double top right here, starts to move up. It could have a nice little breakout and have a very high probability of getting back up into here. So we won't abandon this completely just yet. All right, under retail. Under the hold section here, let's look at this Lovee company, Lovee, 92 strength rank. Now it went to a hold yesterday, but it's been at a buy. It went back to buy it today. So this is definitely one that we could consider for a new entry. We look at let's back out, look at a 1-year chart here. You can see nice little bowl-shaped move, but with the higher highs, higher lows through here is a pretty high probability it's at least going to get back up into here. Maybe not immediately, but it looks like it's working its way there. So here's where it is right now. We could just try to see if we can capture that $7-8 move or something if it gets back up into there. So that one I might consider for a trade, if anything, too, just to diversify a little bit so we don't have all oil stocks in the portfolio. Another one, we're going to dip down on the list a little bit further here, but Target, I mean, it's only a 72 strength rank, but Target, very similar. You've got this bowl-shaped move. It's pulled back a little bit. There's a very high probability that Target's going to get back up into this area here. Now, I am a little bit concerned. You have this little sharp move down, and this is a little bit sideways. Could it have another move down? But that's why I'm going to throw this in the watch list, because even if it has another move down, it won't go to a buy signal. So, in fact, it may go to a sell on that. But then we can look for it to go back to a buy signal and see if we can capture maybe a high probability move up to this previous high right here. So although that's a lower strength, like this is, if you think about it, most of the larger companies, and well, whether you think about it or not, what you'll notice is a lot of the larger like Dow companies and things like that don't get into that 90 strength rank very often. And so for a stock this big to be even in the 72 strength rank is actually pretty good. That's a pretty good sweet spot for some of these larger companies. So, what I would argue would be that yes, it doesn't have the higher 98 strength rank, but because of the size of the company, which means they probably have good management teams as well, superior management teams, that could be a reason that there's maybe a higher probability that stock could go higher, even though it has a little bit lower strength rank. So, don't be afraid to consider some of those bigger stocks as well. And go ahead and put this in the watch list. And who knows, it may make a move so big in one day that we don't want to chase it to that previous high, and then you can just wait to see if it breaks out to a new high. I mean, there's different ways to play that. Let me go back to that chart here. Again, let's say it had a really big move in one of these days, and it's right back to that previous high. Now we don't want to chase it, but then we can wait to see if it breaks out, because if it breaks out, what's the rule of thumb when you have these bowl-shaped moves? You can take the distance from the top of the bowl to the bottom of the bowl, project that distance upward, and that gives you a rule of thumb of how far that stock could go. Ultimately, it could take a while to get there, but there's that upside potential there out of those bowl-shaped moves of where it could go. So that could be pretty exciting, of that potential. Under construction, this LPX, this is a wood company. And what I liked about this is the potential here. This is a little bit of an inverse head and shoulders pattern right through here. Here's your neckline. Now, usually you like to see these at the bottom of a move. You get dropped down, something like that, where you have that, you can see that upside. So this one, it might be one that you'd wait for the breakout first. But I'll throw this in the watch just to keep an eye on it. We can kind of wait for the breakout. And it allows us to be a little bit diversified here. We've got some other areas we're looking at that we could look to get into if we need to diversify the portfolio a little bit. And then lastly, let's look at industrial products. I was looking at this FRD, Friedman Industries, 88 strength rank, so we're dipping down a little bit here. But again, you've got a nice cup with handle formation. Here's your cup. Here's your handle. Again, we'd probably wait for the breakout here. If it does break out, though, you can take the distance from the top of the bowl to the bottom of the bowl, project that distance upward. Now, projecting that distance upward, you probably get up to around right up here. But you have a previous high right there at about 1570 or so. That would probably be an initial target there that I would look at. But even then, if it went from here to there, you can take advantage of that move. This is one we'll keep an eye on here, and it doesn't mean it couldn't go higher than that. It's just that's if you can see some resistance, you always want to respect that. Let's throw this one in the watch list. And then one more real quick, which is right below that one on the industrial products, which is this Fuel Tech, FTEC, 88 strength rank. I've traded this before. Look at the little longer term chart. It was up a little bit higher before. It's kind of traded it within this range right in here. It's come all the way back down. It's kind of been basing here. What I wanted to point out, well, first of all, this shows you potential upside if it starts trending back up again. If it does start working its way into the right side of the bowl, could get back up here to $6 or so. But if we zoom in a little bit further here, you've got this basing move right here, and then you had this sharp rally. Went to a higher high. So you had the lower highs, and then you had higher highs right through here, and then you've had even lows. So you've been able to hold that support, and then it's pulled back in what looks kind of like an ABC pull, but this is more choppy, more sideways on the pullback. Maybe not so sideways, more choppy on the pullback right here. Now the key is it's got to end up giving you a higher low. So we're hoping it stops somewhere in here. It started to move up again today. Let's see if it starts moving up. So we want to watch it, but it's showing some of those early signals of the potential trend reversal. You want to keep an eye on that. If you throw the volume bars on there, you should see some pretty high volume on that burst, and we did see the volume bars really start spiking up right here. And then it's drifted back. That volume has faded a little bit, although it's spiking up a little bit today as it's moving up. So there's buyers. It's showing me there's buyers in this area. But we just need a little bit of confirmation. So let's add it to the watch list. Wait for it to go back to a buy signal. I did have a couple other ones. I got to get to the portfolio, so I won't spend too much time on this, but go to business services. This RCMT, I think we already have this in the watch list, so I'm not going to add it. It's had this big move up. It's kind of looks like it's giving us a little bit of a bull shape move. I'd like to see it go to a higher high and go back to a buy signal. Like I said, I think I've already added that one in. Another one potentially under business services. Bit Digital, this BT, and it's come down right here. You had this impulsive move up. That was corrective. Had this sharp move up. And then it's kind of been sideways right here. We want to make sure it starts to move back up again, but it could be starting to stair step up through here. And then one I really wanted to add was IDEX. I used to trade this a little while last year as well. Wait, where is it? I missed that somehow. Let me look. Business services. There it is. Ideonomics, IDEX, 84 strength rank. Like I said, if you go to a longer term chart, I traded this a while back during this little rally up through here, and then it's come all the way back down. And I'm looking to see if it's turning the corner. It's subtle. It's not quite there yet. Let me take the volume bars off here. But this did go to a higher high right through here. You got this even low. You'd want to see this hold and start moving up so you can go to a higher high. I'll throw this in there just to see if it may be starting to turn the corner again. And again, there's no harm in looking and watching. Doesn't mean we're going to make a trade on it. All right, let's get to the portfolio. You're going to see I've got 2 stocks in there right now. Let's take a look at both of those. SBOW is one of the oil stocks. It still looks okay, and it's moving up kind of nicely today. And so on the pullback right here, it didn't really drop that dramatically. My stop is down below here. Started to move back up. And then the other one was ASAN. Had started to break out last or Tuesday when we were talking. Pulled back, but it's still holding this range. So I didn't see a reason to just get out of it yet. See if it can break out again. Now, what did I get out of? I can look at the trading history here. You can see I got out of. Now, I remember I sold this on Tuesday. I told you I was going to get out. I was going to wait till the end of the day. I went ahead and got out. We had the $1,700 profit on that. That was good. TTI, this was that oil stock. I went ahead and got out, basically at break even. Oh, so so TTI was what I was thinking of. It wasn't that CDEV. So I apologize for that. Again, there's so many stocks I'm following right now and dealing with, and portfolios I'm managing that I can't remember every detail of everything. But that was the one that it dropped. Remember, we're still watching this one, but I had a chance to get out at break even. We end up with a $34 profit on it. I can always get back in it. AR, I took a little bit of hit on. I lost 1,000 on that one. And then TELL, I got out at the same price I entered in. It's not showing it right here for some reason, but it is showing that I didn't lose anything or gain anything, which is accurate. So I don't know why it's not showing the sell price right there. I don't know if that's a little glitch or something, but I did. It was right at the entry price when I got out. It was basically a break-even trade. And then CPE ended up with a $500 profit on that. And then we can look at let me pull up the charts on these so we can look at the details of them. So on TTI, again, we had this gain. We were coming right back down. We were going to close below that low. I think we entered on this in this day right here. So we were basically, we had that small gain on this one. There was AR. That was where we took the bigger hit on. So the stop was down below here. So we took the full stop when it dropped on that move right there. It's rebounding a little bit today, but that was a pretty big hit yesterday on that. TELL. Again, had that big drop down on that one. That was that the one that it broke even on? I think that's the one that I completely broke even on. Or anyway, CPE. So this is when we had nice gains on, and then it was going to close below the low of the previous day, yesterday. And again, with all the other oil stocks selling off, I decided, like, hey, let's protect that gain. Now it's managed to hold this breakout area a little bit. It's back up again today, a little bit of an inside day. Again, I can always get back in, but I just felt like that was the right thing to do yesterday with the way that whole sector was trading. It could, because you never know when it starts to really slip into panic selling, and then you're really taking bigger losses. So, all right, so we got a lot of cash. I do want to add that LOVE. I'm going to keep a tight stop on it. I'm just going to put it below yesterday's low. Which is at 77.91. Let's just use 77. Now to add it to the portfolio, we're going to go into this blue plus sign here. Add it to the stock specific portfolio. My stop price at 77. If I bought 100 shares, there's two things I'm looking at here. I want to keep the total cost around 10,000, and I want the portfolio risk percentage to be between about 1 to 1.5%. So we could do a little bit more than 100 shares. What would be 120 shares would be right at the 10,000, and still below 1% portfolio risk. Let's do that. I think that'll work out. So let's go ahead and purchase it. So again, notice how when we're keeping it around that 10,000 each trade. Notice how each of these slices are about the same size. That's what I'm trying to do. Keep the risk about the same on each trade, and not have too much allocation into one trade. We go into our watch list here. I've booted a few of these out. I think I do want to get into GameStop. It went back to a buy signal. It's been at a buy signal, but it's pulled back right here. It's up again today. Again, I'm looking at this kind of a bull-shaped move. I'm looking to get in and put a stop down below here. So that's at about 167, I think. So in that area. What I'm looking at is I'm looking at this day. So I look at the low of that day, and I want it to be below that low. And so I'm looking at the low right up in here. That's not right, because I'm not over that day yet. But I put my mouse over that day. You can see it says 167.26. I want it below that, so 167 would work. So let's, oh wait, no, I'm not adding it to the watch list. I'm adding it to portfolio. Stop price at 167. See, if I did 100 shares, it'd be 20,000, and it'd be a 4% risk. So I got to go about half that. So if I did 50 shares, see, the portfolio risk is still too high. It's at 2%. I want it 1 to 1.5%. Even though it would fit the $10,000 I'd have in the trade, it wouldn't fit the allocation there. Let's do 30 shares. What would that be? Okay, so we got a 1.21% portfolio risk, about 6,000 in the trade. That would work. Let's go ahead and do that. Let's do the watch list again. I don't want to be adding more oil stocks here. SD looks good, but what I think I'll do here is just wait for the breakout, see if it breaks out. Now, sometimes that can be risky. You can miss a move that does that. CDEV, that was the one we're waiting for it to come back up again as well. CDR, this is a REIT, so a little bit different area here. Yeah, I could add it, but I think I'm going to wait to see if it can break out. I don't want to add too much today. I've already added 2. I might maybe add 1 more, but that'd be it. NOG, I don't want more oil. AMC, nah, I don't want to add that one yet. EH, I don't want to add that one yet. REI, we looked at that one already. Riot, not chasing that one. RCMT, nope. Mosey, still waiting on that one. That was the one we had on Tuesday. ANEY, or some of these we were just added these ones today. I must have missed. Go back to this list here. GMC, DAC, nope. EDRY. I don't like those those shipping companies. They've been really erratic. I think I do like this one, SENS. We traded this one before, I think, but we got this little bull-shaped move here. And a nice little bullish reversal. So you say, how's that a bullish reversal? Well, it opened down here, went all the way up to here, and then sellers pushed the price back down. But it closed higher than where it opened, and it's already pulled back right here. So the fact that it pulled back, it was looking for buyers, got some buyers. Sellers tried to push it back down, but they couldn't push it all the way back down. It's actually a bullish candle, and it's showing up at a higher low possibly. Today, though, it opened higher, and it looks like it's going to close lower. That'd be a bearish price action, though. But I think what I'm going to do on this one is let's just do a real tight stop, maybe. Well, no, let's give this one a little bit of room. We'll put the stop down below here. Although, if it does drop below that low, I may take a quicker stop out of that. But I don't, it could just barely drop below and then come back up. So I don't want to have the stop right up against here. Let's put the stop down here with the idea that it's not going to look too good if it drops below that low, and we could always just get out if it does that. So what's this low below this bottom down here? Would be about 315. So let's use 315 as the stop. Ooh, I'll do 1,000 shares there. More than that, I can do 2,000 shares. All right, so 2,000 shares would give the total cost of the trade 7,500. We could be up closer to 10,000, but we're already kind of within that 1 to 1.5% risk for portfolio risk. So let's just keep it at that. Let's go ahead and just do this amount right here. All right. Anyway, I think we're going to end it right there. We've added a bit. I still have a good portion in cash, so I didn't just get right back in. I still want to keep a larger cash position right here, but let's see if some of these new trades can start to move and get us back above that 100,000 mark. All right, that's all I have. Have a great weekend. We'll see you on Tuesday for the next market update. Bye, everyone.